I'm Suzanne Kunda, broker-owner of Freestyle Real Estate, and I'm here to answer for you today what happens if your appraised value comes in lower than what your contract sale price is. So we all know in the market today it is quite heated. We have a very low available inventory of homes, while we have a big buyer segment that's searching for those homes. So what happens is on any given property, we're seeing multiple offers, and very often the offers are increasing above what the original list price is. So the big question becomes, will the house appraise? Just to explain to you how the appraisal process works. Once a buyer's executed an agreement of sale on a property, their lender's going to order an appraisal. It's a third-party service that sends an appraiser in, and the appraiser evaluates the house for condition, size, features, and any of the comparable recent sales within the community. Once they prepare that report, it has a value on it, and that value comes back and is shown to the buyer. If you realize that now the appraised value has come in lower than what the sale price is, now we have a differential to deal with. So if the appraised value comes in and it's $90,000, but our sale price was $100,000, we have $10,000 to figure out how to make up that difference. So the buyer has three choices to make. They can, first of all, try to make up that difference. So if we have $10,000 and they have that accessible outside the original down payment and the original closing cost amount that they were supposed to bring, if they have funds accessible, they can certainly try to come up with the difference. The important thing to remember is the loan to value amount does still have to remain the same or be an amount that's approved by the lender. So that's a discussion that you would need to have with your lender as a buyer. The second choice you have is to try to renegotiate the sale price with the seller. Because the market and the way it's been heated as of late, sometimes this is a little bit hard to do, but sometimes the seller also has a strong interest in keeping a transaction together. So if there's a $10,000 differential, the seller may be willing to reduce the price by $5,000 potentially, and the buyer may be able to come up with $5,000 and somehow meet in the middle. It's not too often that we see the seller reduce the price fully to the appraised value, but it can happen. And then the third option that you have is to actually, unfortunately, terminate the agreement of sale. It's important to remember that as a buyer, if you're willing to pay above what now the appraised value is, you're paying more than what the appraiser is anticipating to be market value. If you love the house, it may not matter to you. It may be exactly what you always wanted and you're willing to pay that amount. But otherwise, if your circumstances do change within a few years, or a shorter period of time and you have to sell that house, you may lose money. So it's just something to keep in mind. As a seller, if the appraised value comes in lower, it's also important to remember, before we run out and accept any agreement of sale, price is not always king. If the price is high, but we're not really sure it's going to appraise, it's important to make sure that the buyer that made that offer can back that offer up somehow. That they have some financial backing to show that if the property doesn't appraise, I can make up the difference, or I can change my financing or something else, because otherwise that agreement may not be worth the paper that it's written on. So it's important to have those upfront discussions with your realtor, with your lender, make sure that everyone understands the process and what you're offering. So if you have any questions about appraisals, home values, or any of your other real estate needs, please don't ever hesitate to reach out. Thank you so much for watching our video today.